Some investors push the no guts, no glory guide to investing. Other investors promote a far more careful approach. Most investors, it seems, would fall somewhere in between the two extremes, but they would have a leaning one way or the other. Where should you fit? There are a lot of ways to make this decision, but let me suggest that it basically comes down to two main factors: your responsibilities and your personality. Your responsibilities. Well, one extreme. If you have a family to take care of, then you're probably going to steer towards lower risk. If you lost everything, you wouldn't want your family to be penniless, right? Another extreme. If you live at home and have an income, but have no real responsibilities for the foreseeable future, then you might steer towards higher risk. Put it out on the edge, try and get some extra gains. Many of us live somewhere in between, and we have to consider we don't want to lose everything, but we are willing to put a little bit out there for those gains. The second part of making a decision on where you fit into the risk world, your personality. Now, this one might sound a bit weird, right? I mean, financial decisions are very objective, and they have very little to do with your feelings. And this is true to an extent. But you don't want to add a bunch of stress to your life either. If you're the type of person who can invest and roll with the ups and downs of investment, well, then you might be willing to steer towards the risk. It's not going to stress you out. On the other hand, if you're someone who gets stressed every time an investment drops and you regularly spend your nights wondering if you should be cashing in now, then you should probably steer away from the high risk area. Investments are meant to reduce your stress, mainly in the long run. But if you find that you're significantly increasing your stress in the short run due to these investments, well, maybe you should go to a lower risk. Consider your responsibilities and your personality. Where would you fit? Are you a conservative investor? That is, low risk, moderate gains, low stress. Are you an aggressive investor? That is, high risk, more extreme gains and or losses, way more fluctuations, more potential for stress. You got to learn to roll with it. Most investors are between these two extremes, again, but they still have to make decisions about which direction their investments will lean. One way to balance out your risk is through diversification, having a mix of investments. When you hold a variety of investments, you reduce the possibility that all of them will lose value at the same time. If you only have one stock and that company loses value, then you cause some stress. You risk losing all of your money that you invested. So a more conservative investor might decide to put 75% of their investment into low-risk investments, but diversify a bit and put the other 25% into high-risk investment. Safety first for this person, but a little bit of risk for that extra gain possibility. A mixed or diversified portfolio with a leaning towards the low risk. A more aggressive investor might also decide to use a diversified portfolio, but they might put 80% of their investment into the high-risk investments, but protect themselves a little bit by putting the other 20% into lower-risk investments. Not all their eggs in one basket. A mixed or a diversified portfolio with a leaning towards the high risk. Lots to think about here. High risk versus low risk investments, the greater potential for high gains in the riskier investments, but the greater safety in the more conservative investments. And also the possibility of mixing your investments through diversification.